Welcome back to this CNBC TV 18 Conversations. My very special guest is Vis Raghavan, the Executive Vice Chairman of Citigroup. We've been speaking about the global growth story, and Vis Raghavan has been very positive on the global growth environment in general. But let me come to the financial markets yet again. You don't see this AI boom tripping markets. Is it like overdone to such a point, like we saw, at the turn of the century with the dot-com stocks? You don't see anything like that it can.
I mean, famous last words. If I had a crystal ball, what is incredible is look at the dot-com boom. If you look at the whole internet revolution, and it started 97 or thereabouts, it really got hold. You saw frenzy. Any company with a dot-com could go get an IPO done, and then you saw a bit of a correction, and then look at where the 2 decades of prosperity, e-commerce, was invented just then, yes. And it is now, it's mainstream. Yes. You do not, most of us, that is our, our consumption channel.
Our way of life.
Our way of life. So I think AI will do something similar. It'll be seismic in the impact it has, and it'll be incredibly accelerated. So this will be, it took us 2 decades. This will be much more compacted, and new leaders, new champions, new heroes will emerge, and certain legacy models will get crushed. I mean, so there's a natural. It's a bit Darwinian in a sense, and there's a natural evolution that comes on the back of that.
Fair enough. So the concept will survive, but the fittest will survive.
But exactly, and the point is, within that, fasten your seatbelts. There'll be rally correction. There'll be a lot of volatility. It'll get overdone in some cases, and it'll get oversold in some cases. And when it gets oversold, there's a whole bunch that are waiting to pile in, and then and life goes on. So I think we get to kind of besotted by kind of the short term, and it's too myopic to kind of just say is this overdone, is this gonna the revolution is absolutely here, and within that it's a roller coaster. I think it'll have its moments, and you got to approach it eyes wide open. The one thing, as I said, I do think though that unlike the whole internet era or the kind of pre-dot-com era, I do think that the early winners will also feature. Many of the early winners will also feature as late-stage winners. Oh, whereas you remember with that, with the
dot-com, that was not the case.
AOL and Netscape and all of that, and then you had some real champions come through, right. After. But here, I think the investors and the companies that are really kind of leading us into this revolution have the wherewithal, the financial wherewithal, and the economic might to really invest and kind of see through this journey.
It's difficult to see a world in our own lifetime without the Magnificent Seven. I mean, they're too solid to be wished to be.
And does the mix change? There'll be somebody more magnificent that yes. that comes, and someone who loses and falls by the wayside. I think that's inevitable. That's kind of a fact of life. So.
Absolutely. Okay, let me come to perhaps one of your older favorites, debt markets and Fed. What are you expecting? Do you think the Fed is going to continue? I think the broad market expectation, if you go by CME Fed Watch, is another 100 basis. Do you think that's coming, or do you think inflation is going to be? I mean, it's 3% inflation.
Look, 100 basis points everyone is pricing that in. I think that is widely anticipated. The inflationary aspects are unknown. You are seeing energy prices, oil at about $60 or thereabouts, is almost kind of a damping mechanism around kind of inflation and the like. And then you have, within the mix, you have things around productivity, efficiency gains, and all
just the tariff-led inflation that everyone is worrying about.
We don't know that. We don't know what the unintended consequences of that are. And then the question is what happens to employment, and what happens to consumption, because I think that is the wild card, and generally, if the macro environment is uncertain, you tighten your fasten your belt, and then you consume less. And so I think that equilibrium will be attained. But you're still looking at, even if it is a 3-handle yield curve, that's a healthy yield curve. And what you will see on the back of that is a much more robust M&A environment, because financing becomes more attractive.
Yes.
Your cost of capital becomes more attractive. And then with equity valuations where they are, boards today have to justify their share price.
Yeah.
So if your share price is near lifetime highs, near historic highs, or is fully valued, fairly valued, whatever you want to call
Yes.
it, with that comes responsibility. So the question is, where is the growth? And
therefore more deals.
More deals. Because if it's not coming organically, I better go buy my growth. Because if there's no growth, investors vote with their feet, and they punish you for not delivering on that lofty share price you have. So you have a very deal conducive environment, especially with a getting more benign yield curve. And then on top of that, you have the whole macro around tariffs, supply chains. Do I have to make in America? Do I have to buy in America? And the ultimate kind of fuel for the deal environment is the firepower of private equity. Private capital, whether it's private, there's about $2.5 trillion plus of dry powder, which they're paid to deploy.
Yes.
I mean, that's their job, is you got to go spend the money. So then with the yield curve, your spending becomes a bit easier and better. So there is a very healthy underpinning of, if valuations come down, there is buyer interest. Whether
Golden period for deal makers.
I hope so, but the key is a relative certain and backdrop, because uncertainty is the worst, and it's a deal killer. Because boards will say, we don't have to do anything now, let it pass, let's wait. And that let's wait is dangerous from a deal making point of view. So I think you are in an environment where the macro, the micro, the share prices, the yield curve, the amount of liquidity there is in the market, all kind of is pointing to, at least in the United States, a very healthy kind of dealer environment. Then one other last point I'd make there is the relative valuations. So you have, pockets of Europe, et cetera, where you have fantastic companies that are undervalued. And there was a big move, yes. last year and beyond, where they were looking at redomiciling, listing in the United States and the like. And this suddenly looked very attractive when you have the currency to say, hang on, you got some very nice houses in bad neighborhoods
yes.
that you can go and prey on. So, and I think even for Indian corporates, the time is fertile to really kind of, if you wanted to, really kind of, spearhead your growth agenda and have a global kind of growth agenda. I think it's a fantastic time.
No, actually, the Indian government, the Reserve Bank has liberalized foreign loan rules.
Yeah.
And now we can Indian corporates can take foreign loans for M&A, which they couldn't earlier. And they can use even Indian bank loans.
Absolutely
fund acquisition. So,
which is important, because that means deals of size are eminently doable, eminently financeable. And the valuations are very attractive for if you want to prey on an overseas corporate.
Okay, I believe I'm running out of time, but I have to ask you the stable coins and crypto coins questions. With the Genius Act coming in, stable coins is a reality. Well, crypto also may come because there is the Genius Act also coming. Would you worry that you're lending against something which you're not sure?
I think the question is, lending against any asset is a function of the liquidity of the underlying asset.
No, but this one has been more volatile.
It's got more volatile, but then the question is, what is the collateral? What are the collar levels for the margin calls and the like? So I think there's a price for everything.
Yes.
Which is kind of so it is so long as you're risk managing it appropriately, you should be.
Now one hopes the world will figure it out.
And the question also is, increasingly, folks are going to provide custody against these digital assets and the like, and then it's a payment. It's more of a payment mechanism. Yes. So you cannot ignore this. This will slowly become mainstream.
Oh, okay. We have to be prepared for that, and I think India is preparing for that. Well, it was a pleasure having you here. Since we both belong to the same suburb in Mumbai, have you done are you doing the usual rounds in Matunga? What are your favorite spots?
So I have my dosa fix on my way back to the airport. I go to Ramanayak, the Udupi place,
okay.
and I it's a free commercial for Sai, who owns it. He went to school with me, so it's kind of so it's kind of it's a fantastic community. So I usually haunt the same places, and it's really fantastic to see they're all still standing there.
Yes, Ramanayak has not changed. Kansans coffee has not changed.
No, exactly. And then I it's the Hanuman temple near Don Bosco, where I have to go, and then the Ganesh temple near Matunga station on the way to Ray College. So it's kind of it's the same drill, and all of my friends are still kind of in different guises still there or about.
So good to hear that. Those are my favorite places too. Thank you very much, Mr. Raghavan, for joining us and taking us on a global tour as well as the Matunga tour.
No, thanks for hosting me. It's been a pleasure.
Well, that's it on this edition of CNBC TV 18 Conversations. I'm sure you enjoyed it as much as I did talking to Mr. Raghavan.